2 words, tax-free. You like that? How about combining that with tax-free crypto? 3 really nice words, all adding up to tax savings and making money. Hey there, my name's Kenneth French. I'm with vastsolutionsgroup.com. Today we're going to be talking about really, something that we're finding more and more interest in, not only for us, but also for our clients, and that's doing crypto in a tax-free environment. And by the way, my company that I'm here representing, vastsolutionsgroup.com, where we do tax finance and artificial intelligence to lower tax liability for entrepreneurs. But also what we do is we do some blockchain investments. We've been doing blockchain investments for quite a while. We believe that it helps an entrepreneur. So let's get started right off the bat. You can sum up, if you really think about it, the appeal of, Roth IRAs in 3 words. The federal tax benefits, well, add on top of that the new potential of huge earnings in cryptocurrencies, even though, obviously it's going to go up and down, up and down. You have a powerful combination, though. Earnings in a Roth IRA grow tax-free as long as the owner abides by the I.R.S. rules. And by the way, the withdrawals are most importantly tax-free once you reach the age of 59 and a half. You've held on to the Roth IRA for at least 5 years. Now, what I should also say is all the materials we're going to be talking about here today are specifically educational. If you want to really delve into it, you can check our website, www.vastsolutionsgroup.com, or talk to your advisor, or give us a call at 888-808-8278. But really, what you really need to do is really check the fine print. Make sure you're doing the right thing for your circumstance, not listening to a podcast, YouTube, etc. You have to make sure that everything's customized for you. Now, unfortunately, some people do make too much money to contribute to a Roth IRA. In 2021, joint filers, as an example, with modified adjusted gross incomes, with 206,000 or more, and single filers with that same of 139,000 are not eligible for a Roth IRA. In 2022, it's roughly the same. The reason I say that because those numbers will change. But although there is a way for high earners, I always forget this, but it's important. There is a way for high earners to bypass these limits, and it's called the backdoor Roth strategy. And let's get into that in just a little bit. But anyway, high-income taxpayers may create Roths indirectly. So let's talk about that. This involves a little maneuvering, but may be of interest to certain investors, and also can be a huge way and strategy to get involved in cryptos on a tax-free environment. So, the backdoor IRA strategy typically starts with the creation of a, traditional IRA or normal IRA, depends on what you want to call it. Contributions to the new IRA are usually non-deductible because of the IRA's owner's high modified adjusted grossed income. The new traditional IRA is fully or partially funded with usually a financial professional's help, usually tax professional's help. It's usually quickly converted, very quickly, to a Roth IRA, and any tax liability is paid right then and there. I should say when taxes are paid. Sometimes finding an investment professional who has knowledge of cryptocurrency is a little bit difficult, but you can find those out. Be a Googler, right? Anyway, backdoor Roth IRAs are great potential environments, especially for cryptos, depending on your tax situation. So, by the way, why does it? A lot of people ask, well, why does the speed matter? So let's take it into it. Let's break that down a little bit. The longer it takes to convert the traditional IRA into a Roth IRA, the greater the potential earnings of that traditional IRA. Since any traditional IRA earnings converted over to the Roth represents taxable income, those earnings should be minimal if the transfer is completely very, very, very quickly. So if you really think about that example, the IRA contribution is made with after-tax dollars, so the initial contribution amount is not subject to any federal taxes. Another strategy, legally, by the way, to get around this mandate is by taking part or adopting a Roth IRA 401k. I should say a Roth 401k to be specific. Sometimes people call them a Roth IRA 401k, but really they're called Roth 401ks. It does not come with any income limits. The pioneer in the way of Roth 401ks allowing for cryptocurrency was one of the firms that I'm a part of, and that's vastsolutionsgroup.com. We were the first to allow crypto in our 401ks and also in our defined benefit plans, which we do a lot of. But anyway, I digress. Keep in mind this these thoughts are really for educational and informational purposes only. So it cannot replace real life advice. You need to talk to your professional, your tax professional, lawyer, et cetera, et cetera. Let's talk about the pluses and minuses. The big attraction is the potential for tax-free retirement income, not to mention, tax-exempt growth for the account every year. In addition, while mandatory annual withdrawals are required from the traditional IRAs starting at age 72, no mandatory annual withdrawals are subject from Roth IRAs or even Roth 401ks while the original owner is alive. Now, think about this. A few years ago, under the 2019 Secure Act, most non-spouse beneficiaries of a Roth IRA are required to have the funds distributed to them by the end of the 10th calendar year following the original owner's death. That's important, especially in today's world. Now, any Roth conversion, it's taxable. Think about that. And these conversions cannot be undone. So that given, think about the basic rules, for traditional IRAs or traditional 401ks, either one. Generally, distributions from traditional IRAs must begin once you reach age 72. I'm underscoring this. And the money distributed to you is taxed as ordinary income. Well, as a reminder, when such distributions are taken before 59 and a half, they may be subject to that 10% federal income tax penalty, or sometimes it's called an excise penalty. So think about that. So, a Roth IRA, when it's combined with a crypto, any type of crypto, Bitcoin, whatever the case is, ETH, whatever, it's a nice little niche because the taxes are generally paid at the beginning and tax-free gains are that tax-free. So it's really nice. Now, again, I've said a couple of times you have to worry about, all the specifics. Talk to a tax professional, talk to an investment professional, an attorney, etc. And if you need some general guidance, or maybe your tax professional needs some guidance, we work with tax professionals here at vastsolutionsgroup.com a lot. So just, check us out on the web. But more than anything, at least think about this depending on your circumstances. If you're doing crypto and you want to potentially have it tax-free, look at a Roth. Look at a Roth 401k, look at doing a conversion. Depending on your circumstance, you could save a lot of money. Who knows, maybe the $100,000 you've put into a Roth could end up being $500,000 and it could be tax-free. Could be a good tax maneuver. Well, once again, Kenner French of vastsolutionsgroup.com. Hopefully this has been helpful, talking about tax-free and crypto, etc. Thanks, hope you have a great day.